estate investing zoom.com Zoom call, where we get together with new investors who are brand new or experienced investors, wholesalers, real estate agents, and talk about getting it started or making more money in real estate. And our goal here is to increase our income and or to increase our wealth. So sometimes I get a chance to interview a practitioner of the business. Sometimes I get a chance to work with a key vendor in this. And in this case, I would say I'm really lucky that we have not just a real estate investor to talk to today, but we really have a guy who's built a fantastic organization. I had a chance to talk in depth earlier this week. Please give a welcome to Sterling Chapman. Yay, we all cheer. So Sterling, I see you're muted. So give us a background on where you're located and where you do real estate investing and what kind of investing you do.
Thanks for having me, Bill. So I'm in Baton Rouge, Louisiana, and I have two different avenues that I typically invest. One is burr houses. So down in the Baton Rouge area, I have 57 units that I've amassed over the last 3 years, just with a couple of different strategies. Of those units, I think 11 of them are duplexes, 3 of them are fourplexes, and 20-something houses. Most of the multi-family properties, the duplexes and fourplexes, I was able to get through seller financing. And then most of the houses, I was able to burr. So I would just borrow some short-term money, or now I use a lot of my own cash, but when I started, it was kind of like borrowing either private capital or like hard money and go buy a house in cash and fix it up, and then go to the banks and do a cash out refinance and put a tenant in to pay the bill, the note. And it just allows you to keep recycling the same capital over and over again. So, when I first started, I was putting down payments. I'd save 20% and put it down on a house. And after the second house, I ran out of money. So I had to get a little more creative about how I did that. So I'm to the point now where I'm burring about 3 houses a month. And I also syndicate apartment complexes. So we have a 54 unit apartment complex in Noonan, Georgia, where we raised a couple $1 million of private equity from other investors that want to be passive but want to participate in the upside of real estate and all of the different benefits from investing in real estate. And so we raised the capital, the equity, and then we got a loan for the rest. So we have a 54 unit in Noonan, Georgia. And right now we're looking at a couple of other similar size properties with similar capital raises in Raleigh, North Carolina, and other areas in the Carolinas. So I spend about half of my time kind of networking and capital raising for the apartments, and then the other half fixing up houses. And a lot of people seem to think I'm a house flipper, but I've actually never flipped a house. I've kept them all.
Wow. Because for me, the only thrill is getting the check after I sell it. So it's interesting. You're the exact opposite. You enjoy holding them and getting monthly checks, I guess. But
yeah, there's a lot of things to say about that. So I have a day job that provides me with a steady, pretty good income. So, not everybody is in that scenario. And a lot of folks that get started in real estate and they flip houses because they need to eat. And they live off of the flip income. And then they might keep like one out of every third. And that's how they build their rental portfolio. I just happen to be really lucky in the fact that I had a steady income from my day job, which allowed me to just never sell any of those houses because I didn't need the money, because I do believe long-term, you're going to get paid way more by keeping them. And as far as getting the check, like I've gotten plenty of cash from my burring. So, when the process was initially described to me, it was almost like you're just recycling the same capital over and over again. But I always heard they basically pulled out the amount that they had into it. But on most of my projects, I was able to pull out 20 or 30 grand more than I actually had in it. So I love the burring. The way I always looked at it from a flip is, if you flip a house, you're going to have your short-term capital gains. You're going to have a huge tax liability. You're going to have usually a real estate commission to pay an agent to sell it. And then you're going to have holding costs for the months that it was vacant while you were renovating it and trying to sell it. And then you could realistically probably not sell it for the same amount that you could get it appraised for. So once you start subtracting all of that stuff, the taxes, the real estate commission, the reality of what it's going to sell for today versus what you could have gotten it appraised for, and the holding cost, I find that I'm able to get my hands on as much cash doing an 80% cash out refinance as I would if I were to sell it anyway. And all that extra cash I get on the refinance, like I don't have to pay taxes on that. It's not profit. It's technically debt, even though I keep it and I spend it like it's cash and profit. Realistically, it's debt. So it's not a taxable event, and the tenant pays the debt back.
Nice. So I'm sure, like all of us, you were born in real estate, but tell me, how did you get into real estate as a significant side hustle? I guess for you is what it is at this point, or significant source of wealth. But how did you get into it initially? What got you started?
Yeah. So I feel like I've told this story 1,000 times.
I'm sure you have, but
I've gotten good at it. I told it at lunch today. So I did not start in real estate. I didn't know anybody in real estate growing up. I kind of came up with my dad was an estimator at a engineering firm. Just kind of a normal corporate life. That's I always kind of wanted to grow up to be a corporate guy. And so I started with working at the telephone company, and I went back and I got my MBA, and I was going to plan on moving up with the corporation, and that's all I'd ever known. And during my MBA, I started taking some entrepreneurship classes, and I was like, oh man, that'd be really cool to like have all this work that I'm doing, like go towards my future, not like to make somebody else rich. But I was really too dumb to get into anything else. I didn't like I was working in technology and phones, but I don't know anything about a router. I was just a sales guy. So there was just really no, like, I couldn't wrap my arms around like what I was going to go do to start my own business. And around that same time, my boss of 17 years, he wasn't my boss for 17 years. He had been with my company for 17 years. He got surplus, and it just, he'd always done very well at the company. And just somebody in Dallas or Atlanta or one of the corporate offices looked at a spreadsheet and go, I think this year we're going to try and do it with 24 managers instead of 27. We'll just, cut those 4 off. And it's a weird environment we live in where, a lot of times we just give our heart and our soul to these corporations and just assuming they're always going to take care of us. Our father's generation, they worked for the same company for 50 years and then they retired and they took care of them. But now it's a totally different environment. And I was 30 at the time. I'm 35 now, or maybe I was 32 at the time. It's 3 years ago. And I just pictured myself, I was about to get married. I pictured myself with kids in private school and mortgage and car notes and this company that I dedicated my entire life to, just turning off the faucet and having no safety blanket. So I started reading these personal finance books. The first one I read was the church guy that does the No Debt, Dave Ramsey. And I went to it's my wife now. She was my girlfriend at the time. I said, well, we're not going to have any debt. We're going to do no credit, all this stuff. And then a week later, I read Rich Dad Poor Dad. I was like, scratch that. We're going to do the exact opposite. We're going to go get as much debt as we can. And, yeah. So I continued to learn. I got really big into Bigger Pockets and listened to all the podcasts and read all the books and several other real estate books. And I saved up money. And like I said, my first 2 houses, I put 20% down, and I was broke at that point. I put all my money down in down payments, and I almost quit because I was irritated that like I couldn't grow faster. I was like, man, it's going to take me another year to save up another down payment. What am I going to do in the meantime? So I read some books about low and no money financing, and that's what I came across: the BRRRR strategy: buy, rent, rehab, refinance, repeat. And so I found a couple duplexes that I got under contract for 190 grand. And I had never rehabbed a house before. I had no investors. I had no money. I had no way to buy it. And I went to a friend of mine flipped houses, and he had all these investors that would fund his flips, and he was doing all these projects all the time. And I said, look, I'll give you these duplexes, and you can, you know, I'll pay your investors, I'll pay their interest, and I'll give you $50,000. Just buy this contract, fix them up, add me to the title, and I'll do a cash out refinance at the end and pay everybody off. And so I did. And they cost $60,000 to fix up. I paid my friend $50,000. The houses, the two duplexes that we got for 190, ultimately appraised for 390. And the bank gave me 80% cash out. So they wrote me a check for $312,000, which I paid everybody off with. And I walked away with $78,000 in equity and $2,000 a month in cash flow. So
How many times can you do that again?
a lot. I do it. Yeah, I do it.
As many as you can.
Yeah. So that's pretty much the strategy that I have now. But you know, my typical, I get all my deals from wholesalers. Some of them I find.
I was going to ask you about that, and let's talk about what that means and break that down. You get all your deals from wholesalers. What's that look like?
Yeah. So anybody who's spent any amount of time on the MLS or realtor in the last decade tends to know that it's kind of competitive out there. There's not like a ton of deals for people that are trying to invest and buy below market value. So, you know, they do have wholesalers out there now. And I take that back because recently of the last, I finally kind of got it worked out with an agent down here where he helps me find good deals too. I make a bunch of lowball offers and, you know, they accept the one out of every 5 of them or so. Or my agent friend, he'll get, you know, he sold a house to a retail buyer 6 months ago, and then the hurricane came and knocked a tree down through it and they want to get out, or it flooded and they want to get out. So I've had a little bit more traction from on market and through the real estate agent, but primarily most of the deals come through wholesalers. A wholesaler is somebody, and I've never wholesaled, and I have no intention of ever wholesaling. And the laws, I believe, are different in every state. But for the most part, what a wholesaler does is they go market to distressed property owners, people who just got divorced, people who just died and they're, you know, doing probate, or people who are about to file bankruptcy or pre-foreclosure. So they find these people that are kind of in distress situation, or the house flooded and they can't afford to fix it up because they didn't have flood insurance or whatever. And they get it under contract for, you know, significantly below market, usually because it needs some TLC. And typically, you know, the person that, you know, that they're buying it from needs the money quick. So, you know, it's not like a typical scenario where if you were to go sell your house, you would go spend $10,000 fixing it up and then go put it on the market with a realtor and it would take 6 months to sell. You know, a lot of these people are in binds where they don't have that option. So they sell it below market for quick cash. Typically these wholesalers don't have the wherewithal to actually close the deal. They don't have the money. They don't have the financing or whatever. They don't have the capacity to actually flip the house or burr the house or whatever. So they'll take that contract and they'll send it out to cash buyers like me and say, hey, I'll give you this contract for a 5 or a 10K or 12K, whatever their markup is. I've bought several deals where the wholesalers made 15 grand. I've bought some deals where the wholesalers made 3 grand. I don't really care how much the wholesalers make. All I care about is, you know, with how the deal works for me. I've seen people get hung up on how much the wholesaler is going to make. I think that's bad business. I think if you're looking at it from a perspective of like, what's the other guy making? You got a kind of a mindset issue there. You should really just be focusing on like what you're making. Like I hope my wholesalers make a lot of money because that incentivizes them to go out and find more deals for me.
Right. Well, they create some liquidity in the market, right? They're kind of a buffer between the buyer and the seller. There's a third level kind of gets in the middle. They're called a wholesaler. That the seller tells the agent they won't sell it for that, but they sell it to some wholesaler who comes to us and he's happy to make less profit and the deal gets done. So, and it's interesting that you talk about it because anybody in real estate has wholesalers who approach you with deals, right? You go to Facebook, there's wholesalers. You get emails, there's wholesalers. You go to an REI event, there's wholesalers there. So we all get. How do you know to separate the wheat from the chaff? The good deals and the bad ones when wholesalers approach you on deals.
Yeah, so that's you need to know your market. So I desperately want to buy houses outside of my immediate market, but I struggle because I don't know other markets like I know my market. Like, because you can't trust wholesalers. Wholesalers, you can trust like 1 out of every 10. And look, the ones that are gold, but the other 9, there's no barrier of entry, right? So anybody off the street can go, I'm a wholesaler. Here, buy this house. It's worth $200,000 fixed up. And you plug it into, PropStream or something, and it's in like a really bad neighborhood where every other house on the street is worth 30 grand. You're like, okay, well he's lying to me. Like, it's not worth that. So if you don't know what you're doing, I heard it explained yesterday is they're not a fiduciary. So like, you got a real estate agent, like typically they're not supposed to take advantage of you. I mean, some of them do, but they're legally bound and licensed to take care of you and act within your best interest. Wholesalers have no regulation, no test, they just, they go out. There's really no barrier of entry. So you got to watch them. But if you get some good ones, I've got a few that I kind of trust their numbers, but most of them I independently verify. I would not make a best practice of just trusting a wholesaler's estimate of rehab cost or ARV.
So you said you make 5 offers, and you made it sound like that's frivolous, but there are many buyers who are buying a house for themselves who think they're motivated buyers who make 8 or 10 offers before they buy one. So I'm curious, the 5-to-1, how many of those do you make? You make 5 daily, 5 weekly, 5 monthly? What's that look like for you?
So it really depends. I always say like, sometimes it feels like I have a different business every day of the week, and it depends how many projects I have on my plate. A lot of times people will send me a project and I've got 3 houses I'm working on at that moment. And so I'm like, well, I wouldn't take this deal right now. Like if it was a rock star deal, I would figure out a way, like I would go get another private investor. I would figure out a way to get it in.
Right.
But I'm not interested in going out of my way to pick up this deal because I've got these other projects that are taking up my energy and my resources. Right. Whereas if they would have brought that same deal to me on a day that I didn't have any other projects I was working on, I would take it. So a lot of it's just about timing with me. I spent the first 2 years I was doing the thing with the houses, and I really only felt comfortable doing one at a time at first, and so I would at that point, like wholesalers fed me as much as I wanted to eat, and so I only did like 4 last year, whereas this year I've done like 14 already because I've got more cash so I can buy more houses at the same time. I've got more lenders, so like I can move them off of my small local banks that I use to refinance them into like a long 30-year fixed rate loan and that's where I ultimately want everything to be. So I've ramped up, I've ramped up production to where now I want more houses. So now I'm actually back to, I just started the making offers on things that are on the MLS. And I know y'all are in Southern California. It's probably like a different world than South Louisiana. And I imagine you couldn't get a shack over there for $150K, but my sweet spot of like the houses that work for me is I like a house to be worth about 200 to 250,000 ARV. and I like to be all into it for 70% of the ARV. And if anybody ever sends you something and says it only needs a 10K rehab, they're lying, because you can't clean a house for 10K. So, I mean, I typically like to buy house in order to fit in my range. I'm going to need a house under $150,000. With the wholesalers, the average price I pay a wholesaler for a house is $80,000. When I buy one off the MLS, the average price I pay is probably $110,000 to $120,000. So what I do on the market when I want more deals, when the wholesalers aren't sending me enough to, quench my appetite, I'll pull up the MLS, or I'll pull up realtor.com, and I'll filter to everything under $150,000. I'll look at, the markets, the areas that I would want to invest in, because I don't invest in danger zones or war zones. And then I'll just put in as many offers as that are there.
Yeah, and I think that as a listing agent, I get those offers. I don't mind getting them. I mean, I do mind when somebody misrepresents themselves.
Well, I do mine 2 weeks, 2 weeks cash closed, no inspection period. So agents love them because they never fall through.
Yeah, I mean, it's not bad to have that. Now, does your offer look like a regular real estate agent form? Do you use the realtor forms? Are you doing a separate LOI type thing, or how do you make offers?
Well, so when I am making offers on the MLS, properties that are listed, I just call my realtor and say, hey, offer, he'll just plug in the terms on a regular Louisiana purchase agreement. When I am going to meet somebody at their house to try and buy a house directly from a buyer, I'll bring a Louisiana purchase agreement and I'll fill it out right there with them. And if a wholesaler sends it to me, they'll typically send me a contract that says they're assigning that other contract they had to me.
Okay. Yeah, no, I think that sometimes investors are first-time investors are a little shy about making offers. Am I going to offend the listing agent? As a listing agent, I'll take all the offers I get via email. They all just go in your inbox, and you can tell people you have offers and there's nothing wrong with them. And I think even your numbers, when you said it, I'm not here to judge you. I'm just saying you sounded a little hesitant to admit that you write 5 offers to every one. I think any real estate agent who has buyer's agents would love buyers who bought after 5 offers, because I don't think that's always the case. For some, especially first-time buyers, they take a lot more time than that. So hey guys, listen, I did talk to Sterling already for quite a while recently. He and I have a lot to talk about. I enjoy his style and find it to be a lot of fun. Very different market than we're in, yet at the end of the day, it's a business. But you have a chance to talk to a guy who has, how many deals have you closed in the last 5 years or 3 years or so?
It's 3 years, and
hang on, everybody, when he says this number,
we did the apartment complex, which was 54 units, and then I've got 11 duplexes, 3 fourplexes, and 20 something houses.
Yeah, so, in 3 years.
Yeah.
Part-time while you're working at your full-time job.
Yeah. And I have a 6-month-old and a 2-year-old, and they're quite demanding as well.
And a wife.
Yeah.
Now Mike can't hear, so I can say she takes time too, right?
Yeah.
So I think that's the thing that we all kind of get caught up in, is we're all so busy, and I'm the same way. I'm having my best year ever as an agent, and I keep maybe holding back a little bit or not jumping on the next deal because I'm busy. And I talked to a guy like Sterling, like, holy crap, look what he has going on in his life. I'm blessed with my first grandchild, and my daughter will come over and bring him here, and I'll hold him for a little bit. And oh my gosh, my workday was interrupted. But you got 6-year-old material to home. that's a whole different ballgame than them coming to visit you at the office. So how do you so anyhow, anybody on the call here, if you're on live, unmute, jump in, or hit the chat box. If you're watching on Facebook or YouTube, I can monitor your comments there, or if it's after the fact, if you put a chat in, I'll get it back to him, or we'll answer you somehow. But you're talking to a guy who's really built a business in real estate, flipping, like a lot of you want to do. So here's your chance to ask some questions. Anybody have anything you want to throw out there?
Hey, I do.
Oh, hey,
Hi,
Annabella, how you doing?
hi, Bill.
Hi.
Hi. So, how are you getting your deals or finding your deals? Or maybe you said it and I missed it. I came in a little late.
Yes.
Sorry.
Yeah.
Sorry
So
about
primarily with wholesalers.
that. Okay.
So I tell everybody that approaches me about how to do this because in the beginning, all my friends and family said I was crazy, and now everybody wants to know how to do it. And the answer for me has always been like go to local real estate meetups. It's every business is a people business, but the real estate business is very, very much a people business. I get deals sent to me that nobody else does because of all the relationships I've made. And you make those relationships in those local meetups. And when COVID happened, they shut them down in Baton Rouge, and we didn't have any for 18 months. I noticed there was like a huge demand and people really wanted to go to them. So I started one a couple months ago. So now we have, 40, 50 investors come to our meetup, and it's great because it's a bunch of wholesalers looking for cash buyers and a bunch of cash buyers looking for wholesalers. So, getting them in the dance together it really creates it just kind of expands the market. But
And at these meetups, are you guys talking about anything, or is it just a social? Everybody talks kind of on their own. Are you presenting something to people?
yeah, so we try and present and offer a little bit of education, but the goal is the socializing, is the meeting, is the relationship building. Nobody is, I mean, anybody can go watch YouTube or listen to an audiobook and learn some. The key is to build relationships with other people, and not just go hand your business card out to 50 people, but like to really sit there and talk to somebody, and then to take them to coffee afterwards, or to take, to really build those relationships is
Right.
absolutely the key. So, you know, some people are very, tight to the vest with things. And I've always, found that to be a lackluster. I like to kind of look at things from like an abundant mindset. Whereas like, I have a Rent Roll Radio podcast where I do a lot of network. I've interviewed over 100 investors, and, it's great to network with them, but I'm trying to give all that information out to free to anybody. Just like I got all of my deals from a number of wholesalers that I can count on one hand. I invited those wholesalers to that meetup with all of my friends and everybody that wants to find deals. So like basically I created a lot of competition for myself, but what you find in that type of giving environment, it ends up coming back to you. You create a higher demand, more people go out and start wholesaling. It grows. So I would just encourage everybody to go out and meet and build relationships with as many people as possible: agents, wholesalers, lenders, other investors. I have, different investors are at different parts in their journey. I bought a fourplex that was great for me starting out, but 2 years later I was like, you know what, I don't really want to be in that area anymore. I don't need to own stuff in that dicey area anymore. But my buddy, who was just starting out looking for his first deal, it was great for him, and I made a little profit from holding it for a couple of years, and now he's doing great with it. We're just at different parts in our journey. So it happens all the time that I buy from other investors and other investors buy from me, and that kind of thing.
Do you do any kind of syndication?
I do.
You do.
So
Okay.
yeah. So like I said, we have a 54 unit apartment complex in Noonan that we did. I've been working on the syndication for a couple of years. It's really hot at the moment, and it's hard to get good deals to pencil. We had, like I said, a 54 unit in Noonan, Georgia that we did last year. It was a $5 million purchase. We raised $2 million for it. And then we have another one that we're about to raise $2.5 million for, if we can get it. It's in Raleigh, North Carolina. So we're, that's ultimately where I want to spend most of my time and energy, is buying apartment buildings. And I've talked to a lot of people about, that started in single family and then moved up to like apartment investing, and they don't mess with single family anymore. And it's weird because they kind of like look down their nose at like single family, like, oh, I don't do that anymore. Like I've graduated. I'm like, well, okay, but I made $1 million last year while you were looking for an apartment complex with these houses. So like, you don't need to like, look down your nose at like if you're buying apartments, how many apartment buildings can you buy in a year? And how much of that time is it going to take up? What I found is after looking for 2 years, we're like closing in on our second one. And like, there's a whole lot of other hours in that year that you could be capitalizing in other areas. That being said, like, I don't suggest you get shiny ball syndrome and go chase every avenue. Like there's a lot of things I've wanted to do. I just haven't had the time to pursue. Like I'd love to have Airbnbs. I just don't have the time to go chase that rabbit hole down right now. I'd love to, try this market or try that market so I think it is important to focus, but I think realistically you could probably, do single family houses and apartments congruently or simultaneously.
Yeah. Well, I mean, to do single family in California, oh my gosh. It's
no,
it's
for sure.
It's definitely
so a lot of people invest long distance. My best friend is in Coeur d'Alene, Idaho, and they're in a similar situation where the houses are $500,000 and they only rent for $2,000. So like there's really no cash flow. And I've always heard, California was the same way. A lot of folks I know out of California, they'll do long distance real estate investing. David Green from Bigger Pockets wrote a great book on long distance real estate investing. One of my good friends was one of the first guys I interviewed here. He's from California, and he started buying a bunch of properties in Baton Rouge from California, sight unseen. He just bought them down here because they cash flowed so well versus how much, how everything was in California. And then he looked up and he had a couple hundred properties. So he actually moved down here
cool.
and lives off his properties. And he lives in like a huge mansion down here. But he said, man, if I was in California, I'd be like, I would the same amount of money wouldn't be able to get me that big a house. So there's a lot of people are doing the long distance. I encourage my best friend to start looking in Houston from Coeur d'Alene. I know a lot of people look in the Midwest from California. There's a lot of great cash flow markets, Memphis, Tennessee, Alabama, Kentucky, the Southeast and the Midwest are still great cash flow areas.
One of my closest friends, Alan Gordon, I interviewed him here a year ago because he did his first burr in Kansas City, Kansas, not Kansas City, St. Louis, Kansas. And he's there now on his third, and he's done really well because the numbers just pencil out, and it's a different market. Melissa, I see you patiently with your hand up and your mask on both.
Yeah, we have more staff. Hi, everybody in the office
Hi.
than normal. So I try to keep myself and the staff safe. But
I don't mean to make fun of you. It's just you're the eye candy on our call here, and so when you masked up, a lot of the guys drop off the call. They come and see you, and then they run away. So.
well, thank you. I appreciate it. But I actually wanted to just say, on Sterling's point, I mean, it's a huge relationship building of it. And I think the deals come to you as you hand out. And I think, Bill, you've repeated it almost every call I've been on, is that it will come back to me. Again, people sometimes, I don't want to share my investors because you're going to steal my investors' attention. There's enough money out there for everybody. And deals come from property management companies. They come from construction companies because they have no idea or inkling on how to do. They don't even realize how simple it is. I had to recently take a class about how silly it could be just to get a deal, bring it to this, hey, it's a great price to the right investor, it's going to make sense. And I actually like your demeanor towards it of I don't care what they get. I think if it was equal, that'd be wonderful. But I know that there's people out there and investors that say, absolutely not. If I'm forking up all the money, I want the majority of the profit, and that's okay. It depends on the investors and the deals, right? So, but I think it's just that the pool is large and there's enough for everybody. And I mean, I hate when you guys knock California, but there's still deals being made out here. Some of my
I
owners
get it.
sell and they're just like, I put my hands up. I don't want to deal with it. So there's stuff to be done, but you're right. You do have to know your markets. I have turned investors off to some of the properties that they were looking at because I told them what the rental rates were. And they're like, oh no, I'm not going to get the return on it. That's all I'm going to get. I'm like, that's what it is. I mean, that's just what the market says. You may think that your property in Los Angeles and kind of a shady area that's a brand new build is going to get, $3,000. Sorry, it's not going to. So, you've got a good method and it's solid. And I think anybody who's like new into investing, it's just, this is the way. And it sounds like it's so easy. It's silly, but it's just do it. Find the deals. So congratulations on your portfolio. It sounds like you're rocking it.
Thank you.
Yeah, and Melissa brings experience as a property management company and resource for people in our Southern California market. So she knows when you talk about that many units, somebody behind the scenes. Well, let's talk about that. I know you're not knocking on doors collecting rent checks.
Anymore.
I also know
Anymore.
Well, you're not the guy that the toilets clogged. They're not calling you
anymore.
Well, let's talk about how that.
I did it all,
started.
Man. I scrubbed toilets. I showed units. I swept floor. I picked up garbage out of the neighbor's yard so that my property would look better sitting next to it. Oh man, I did it all. And I will never do it again. But I managed my first 26 units. I managed my first 18 units effectively. And then I bought a package of 8 that pushed me to 26 units. And that was when it really started to test me.
Suck.
Yeah, suck. It did. I first of all, I was bad at it. I don't know how to fix anything. And a tenant would call me and I would run over there to look at it. And I'm like, okay, I got to call a plumber, or I got to call an electrician, or I got to call a drywall guy. And I don't know why I had to run over there to do it all the time. I would have conflicts with tenants. I was good at leasing. I was good at filling the units quickly, but I was not good at any type of maintenance. And it was driving me crazy. And there's a lot of like weird things that drive you crazy about it that you don't even think about, like, because it's your property and you're like constantly like worried that it's going to be damaged. You're too sensitive. Like now I'm to the point where I don't want to know. Like, I don't want to know if something goes wrong. I don't want to know if there's a vacancy. I don't know. I want to know if some tenants cussing my name. I just want my deposit at the end of the month. Like my property managers, and a good property manager is gold. There's a lot of bad ones out there.
Well, hold on, say that again now one more time, because we have a property manager on the call. So
a good property manager is gold, and there's a lot of bad ones out there, and they get a bad rap. And it was hard for me to let go, because when I did the math in my head, it was like when I turned it over, I was like, okay, it's like $3,000 a month paying for this property manager. And now I probably spend $8,000 a month on property managers. But at the time it was like $3,000 a month. And I was like, man, I'll be losing that much money and all of this. But man, I remember the day I gave it away, and I describe it to everybody. I felt like I bought a shiny new car. And I'll never look back. I mean, it's good that I went through it, because like I can spot things that are not right. I know how much, like I'm intimately familiar with the properties and the problems they have and the tenants and stuff. So when something doesn't, sound right, I understand. I know how long it should take to fill that unit, so it helps. Anything you got to manage, you can never be totally hands off. Like as an owner, you can never totally be hands off. You have to manage the property managers, and you have to manage everybody else. And it always helps to have done the job that you're managing.
I think it's critical. I think it was the Bigger Pockets podcast last week. They had the author who talks about processes and procedures. And he said, you really can't delegate effectively if you can't do the job yourself. Sure. So that's why I never did rental properties. My brother retired off of rentals. He bird several properties, and even through a nasty divorce, kept a bunch of equity, kept some property, and is retired on it. Personally, I can't even hang a picture frame. So, I would call you for help if I had a plug toilet up. And that's why I know what I can and can't do, and I stay within my lanes. But I do think that for those of you who start off, if you're going to get into a place where you're going to have property management, you probably need to learn what all that goes into. So when you hire a property manager, you know a good one from a bad one. Otherwise, you just see it as an expense that you're probably not going to want to pay. And for most people, that's a big mistake. And I know when I have customers tell me, well, this property management company is only 5%, this one's 8%. I'm like, well, do you know what they do? Do you know the differences at all? Like, have you really walked through the whole process? Because you can save money and lose everything.
Yeah, don't go for the low cost provider there. But one thing about managing properties, I've found for me, and this is nothing against anybody who chooses to be a property manager, but like it's always weird to me that people want to get into real estate investing because it's like there's a lot of like freedom and money and all the reasons you want to become a real estate investor. It's so weird to me that people like do the opposite when they become a real estate investor. They'll quit their day job because they want to go invest in real estate, and they'll become a wholesaler or they'll become a property manager and it's like, well, you just like you invest in real estate because you want to get out of having a job. All you did now is move your job over to real estate. You know what I mean? Right. Like I have a job that pays me, and like if I were to be managing the properties, I'd basically just be trading one job for another. My reasoning behind getting into real estate was not to like have a real estate job. It was to have no job. It was to like replace my income with, something passive. Right. So that's, I feel like that's if you really hate your day job and you think you would like being a real estate agent or a property manager or a wholesaler better, that's one thing. But to me, it's weird how people, they make that jump and they just basically buy another job or they just switch jobs. And I always think you got to focus on the freedom, the exit strategy.
Yeah. I think most real estate agents look at their business as a job where they're on a straight commission and they don't pay their taxes at the end of the year. And then they scramble for taxes next year. And if you run like a business, you build, like any business owner, you build flows of income that you can choose to retire on or sell or delegate or something else. And that's where I really work with agents now a lot to help build an exit plan. And I'm on one actually where more and more of my income every month is based on the business I built, not on what I do. I still sell houses. I love doing it. But I see that ticking time clock of my life. My grandson's 2 months old. And at some point, next year and a half, 2 years, I'm going to not want to have to come work every day. And I won't have to because I need to build this new business. And I see why that's what you're doing the same thing. My guess is you still enjoy buying properties. And
I love the hunt. One of my friends confronted me the other day about like, they were like, well, how many do you have? And at what point are you going to retire? And then so I'm sitting there doing the math for him about like when I could quit my day job or when I could, retire. And he's like, yeah, but Sterling, if I come talk to you in 7 years, like you're not going to be retired. You're not going to be doing anything. You're going to be out here buying houses and syndicate apartment because you like enjoy the process. And I do. I get excited when I get excited creating the wealth out of nothing. It's truly, it's truly creating when you take a $70,000 house and you add $30,000 to it, and it's now $150,000. You didn't take that wealth from somebody else. You created it out of thin air, and I think that's cool.
Definitely. Well, and I think that's what I like is the hunt too. Giving somebody a proceeds check or helping them make some wealth or income. That's the fun part of the job. So towards that, I know that you have Rent Roll Radio and you have some sort of a coaching system or program.
I don't have any coaching system or program.
Oh, I'm sorry, I misunderstood. So tell me about Rent Roll Radio. What do you do with that?
So I started the podcast, the Rent Roll Radio Show, in November of 2019. So right around the time that I was going crazy managing my properties and trying to figure out how to scale. I had people that wanted to invest with me and no deal flow. And so I read Joe Fairless's best ever apartment syndication book. Anybody who's interested in apartment syndication, is a phenomenal book. Joe Fairless he's a beast. I think he's got $1 billion portfolio now, but he just goes step by step through like how you evaluate markets, how you evaluate deals, how you fund the deals, how you build your brand, how you become a thought leader and expert in the industry. And he was real big. He did a daily podcast. He's got the longest running daily real estate podcast. And he was real big on the process. He said, you do a lot of things when you do a podcast. You just like, you force yourself to continuously learn because you're always interviewing really smart investors, and you force yourself to continuously network. I always say, like, I don't care if anybody listens to my podcast. I get so much value out of the relationships I built with just like with Bill here, the relationships I build with the folks that I interview. And then, most people that would potentially invest with me tend to think I know what I'm talking about a little more than the average Joe, because of not only what I've accomplished, but all of the geniuses that I've interviewed, all the brains I've been able to pick. So it kind of sets you apart as a thought leader in the industry, and that which makes raising capital to fund your deals so much easier. When I first started, I couldn't get anybody to invest in one of my deals. Now I have a very long list of people that are like, wish they could get in my next deal, but I just don't even have the deals to keep all of their money busy.
Nice problem to have.
I have a quick question. How are you approaching people when raising funds, capital?
So I typically don't.
Okay.
Usually they approach me. I talk about what I do a lot, and I share on social media, and most people bring it up to me. If I just talk about what I'm doing, if I talk about how I'm raising capital for an apartment deal, usually people will ask, hey, I've got some money. Do you? I can't think that, there's some rare occasions maybe when I know somebody has money and they didn't ask, and I'm like, hey, if you'd be interested, by the way, I'm doing this. But I would say most people have approached me. The thing about raising capital to fund deals, whether it's on the debt side or the equity side, and I do it both ways, right? So I have, like, to fund my BRRRR projects, to buy these houses cash, I take on debt. I'll say, hey, give me $100,000 for a year, and I'll give you $120,000 at the end of the year. People are ecstatic to get that. So when hey, we'll go put this money in this apartment complex, you'll double your money over the next 5 years. People are ecstatic to get those kind of returns. People are jaded by the stock market, and they get burned out in all these other areas, and crypto's too risky, and a lot of people don't want to do the homework. And so to be able to get these really good returns, like, people, at first, I remember initially when people were funding just my small deals around town, my wife got really uneasy with the fact that, like, my brother was going to invest in one of my deals. Well, I don't want to owe Andy money, and blah, blah, blah. And really, like, it's not like I went and begged him for money and said, hey, please give me money so we can do this deal. He knew I was doing deals. He saw me getting educated. He didn't want to spend all that time getting educated, but he wanted a good return for some money he had. So he asked me if he could be a part of that deal. He's like, I don't have the time. I don't have the energy. I don't feel like reading all those books, but I'll give you I'll write you a check. Can you give me a good return? And so many people are like that. So many people are so grateful to get that return that you just, one thing I see people starting off with raising capital is they feel like they're begging, or like they're selling, or like, and it makes them uncomfortable to ask and to bother people for that thing. If you realize, like, most people want that, it's a complete mindset shift, because that's the case. People love getting those kind of returns for not doing anything, but just handing you money and getting those returns.
Everybody you meet either wants to make more income and or wants to increase their wealth. Everybody. And you have to understand that's where people come from and give them a chance to express which they are and help them in that area. Well, look, we've gone, I really appreciate this. Sterling, we could chat for hours. I really enjoy your company. Tell us where people could find Rent Roll Radio if they're interested in joining in on what you do and getting more of what you're working on.
Awesome. So yeah, you can follow me on Facebook, Sterling Chapman. There's also a Rent Roll Radio page on Facebook and a Crest Worth Capital page. Crest Worth Capital is my apartment syndication business. I have some websites. You can go to sterlingchapman.com, rentrollradio.com, or crestworthcapital.com. And then you can go to anywhere that they have podcast, iHeartRadio, Apple, Android, any of the podcast places, or YouTube. I also release all the videos there.
Fantastic. We'll put that in the show notes as well. And again, my only criteria is, do I enjoy having you on, and do I learn? Like you said, it's the secret of these calls is It's not that I'm so generous giving other people help, is I enjoy learning and I enjoy our time we spent. So I just want to thank you on behalf of everybody, your generous spirit. Thank you so much for sharing a lot of the details, sharing where they can find you in the future. And I really appreciate you. And we'll see you again real soon. Okay.
Awesome, Bill. Thank you so much for having me on. I really appreciate everybody.
Thanks. Bill Gross. This was realestateinvestingzoom.com. We do it every Tuesday, 3 p.m. Pacific, 6 p.m. Eastern. We're also on YouTube if you want to see it after the fact. My YouTube channel is Bill Gross EXP. I also do a Thursday, probateweekly.com. We get into probate real estate. So look forward to seeing you. Hopefully, if I can help you in any way, call me, text me, email me. Make it a great day today. Thanks so much, everybody.